And thank you for joining us for this session presented by Aptitude Software and CFGI, Building the Blueprint Toward Revenue Automation, Practical Steps Toward Revenue Management Success in a Changing Economy. I'm Megan Billingsley with CFO Dive, and we are happy to have you watching this overview. We have two revenue automation experts presenting on this session. David Lopez is a director of the accounting advisory practice at CFGI. He focuses predominantly on matters relating to revenue recognition, including technical accounting, reporting, and automation with over 12 years of experience. Prior to joining CFGI, David worked in the audit practice at Deloitte & Touche. Mark Aubin is a senior vice president of revenue automation at Aptitude Software. Mark brings over 20 years of experience in enterprise financial applications and has served in senior roles as a product vendor, consumer, and consultant. He has deep finance and operational knowledge across diverse industry sectors and has been focused on solutions for financial regulatory compliance and modernization since 2007. The agenda for today's session is as follows. Mark will start with a review of why businesses now need revenue automation going into this year and beyond. Next, Mark will provide an overview of the benefits of automating revenue. David will then review revenue automation best practices and steps. And finally, David will wrap up the session with tips on how to make a case for revenue automation in your organization. So at this time, I'd like to hand it off to Mark Aubin of Aptitude.
Thank you, Megan. So first off, what is revenue automation? Now, most people are familiar with revenue recognition. The ASC 606 and IFRS 15 guidances that went into effect at the latter part of the last decade were a key reason for people to be familiar with revenue recognition. But what is revenue automation? So 606 and IFRS 15 had a lot of organizations investing quite a bit of money in systems and process improvements across a variety of industries. However, those implementations didn't necessarily automate the revenue recognition process. And whether they did or not, the organizations are still in a state of maintaining those processes as the guidance didn't stop. It's still in place and will continue. Organizations are now looking for additional value add, and that comes in the form of automating those revenue processes. So revenue automation is the exercise to streamline the full end-to-end process. It starts by automating capturing data representing contracts, events, and performance obligations, bringing those into one place to provide real-time visibility to the organization of those contracts and obligations, understanding those performance obligations and how you're going to fulfill those obligations, automatically applying rule-based revenue recognition policy against those contracts and obligations to then automate all those calculations and the accounting and flow those into general ledger and any reporting. Now, why is that important? The main goals of any automation, but specifically revenue automation, are error reduction, big key element that people are worried about with risks and audit. Mitigate those compliance risks around doing revenue automation, provide much more improved accuracy across the organization, as well as transparency into detailed granular data on how your organization is running, and provide that visibility of revenue streams. And that last bullet point is probably the biggest thing coming out of revenue automation is there's a wealth of data that's available to the finance and accounting departments, and be able to get that data out to other departments and silos and business groups within the organization provides great value and moves the finance organization into a position of strategy rather than just accounting and compliance. So a couple bullet points or a couple key metrics I want to highlight from external resources that really underscore the need for that revenue automation. Right in the middle, 30% revenue team attrition. It's costly to replace resources, and resources are looking to expand their skill sets in the organization and in their finance backgrounds. Additionally, 80% of finance processes can be automated. That's a huge opportunity that's available, and revenue recognition is one of those key points where we can automate revenue processes. Now, many organizations are going through a business model change, specifically to recurring revenue or to a subscription model basis. And simply put, an organization will not be able to keep pace with the dynamic nature of the space if they can't automate processes, and specifically revenue automation. This industry of recurring revenue is growing nearly 20% per year, reaching $1.5 trillion by 2025. So a lot of CFOs are really focused on increasing their stake in the recurring revenue models. Over half of the respondents in the CFO survey said that 40% of their revenues are recurring. They're always looking to grow that number. Also, revenue is growing 7 times faster for subscription businesses than the average S&P 500 company growth rate. And finally, almost half of those businesses are struggling to meet accounting and reporting challenges. Now, revenue automation as a business differentiator. CFOs have identified their priorities in their business as identifying new value across the business, planning and insight generation within their organizations, and shifting finances roles to sharing those insights across the organization. This is the key benefit of revenue automation. I've always said that recognized revenue and deferred revenue and the trends within those balances really truly reflect the health of an organization, and providing that detailed data that is properly accounted, properly controlled, and quickly to the rest of the organization is one of the most important insights that an organization has to move the finance department into strategic decision-making organization. So quickly switching over to revenue automation benefits. Aptitude has always helped our clients, chief financial officers, to be able to comply with complex regulation. We've done that by providing high levels of automation in the Office of Finance for complex tasks, often as a basis for financial transformation programs or to support cost reduction and improve the financial close process. But CFOs now need to transform their functions to support a much wider set of business objectives. They need to provide much more real-time data, and the technologies are now mature enough to enable this. The Chief Information Officer is also becoming a much more of a key stakeholder for the CFO and in turn for Aptitude software. But much more than just finance transformation for cost reduction and efficiency, the CFO and the CFO office also must now enable the performance of their business by supporting evolving business models and generating new kinds of recurring revenue, especially in the growing subscription economy. So the Chief Revenue Officer and Chief Marketing Officers are now becoming key stakeholders as well. All of these stakeholders and their requirements are creating huge growth opportunity for Aptitude software, our partners, and for our clients. So this slide represents what we internally in RevStream call the revenue wheel. And it really does represent the transition from revenue recognition with the 606 and IFRS 15 guidance is becoming effective, into the automated revenue management cycle. Traditionally in the bottom left where you see revenue recognition and revenue accounting, that's what a lot of the systems and solutions on the market first focused on back in the 2012, 2013 time period, leading up to the 606 guidance application later in the last decade. But as companies started implementing these solutions and started looking for efficiencies and where they achieve greater value, this wheel really became apparent. Because the organizations were focused on revenue recognition, seeing what the impact to revenue recognition was on their financials, they started seeing the impacts of upstream and downstream processes. So they started becoming more involved in the pricing decisions. So if we start focusing on the top right of the wheel, revenue teams started focusing on the pricing decisions of new offerings to market. So whether it's a new subscription, new bundling, they could look at their standalone selling prices, see how discounts were executed in the past against contracts, and really understand the impact of the balance sheet and the income statement of those pricing decisions. So being available to the sales finance teams on their pricing decisions really helped to streamline this process. Once pricing was set, then the ability to automatically capture contracts and the performance obligations around those. And if you think of performance obligations simply as what did you sell, when do you have to deliver it, and what were the pricing in terms around those obligations, that's all about what a performance obligation is, as well as the other things like variable consideration and interest and significant financing components. But being able to capture all those different elements in a single system automatically to perform the revenue recognition that was already in place, companies really started to realize the efficiencies that could be gained by automating this full process. If I go back around the wheel through revenue accounting, and now we're focused on revenue subledger, because we are generating all the journal entries that properly recognize revenue, you now have a true revenue subledger down to the detailed basis through any kind of stratification, whether it's by sales channel, whether it's by region, different promotions and offerings. You can now track deferred and earned revenue and any other liability and assets against that within a detailed subledger. And that provides a great amount of insights to the business. So having those insights and be able to publish that information out to your stakeholders, whether it's for regulatory compliance or just management strategic reporting, becomes very valuable. Those in turn then influence your pricing decisions all over again. And that's why we call it the full revenue wheel or the full contract lifecycle that can be achieved with revenue automation solution. So the advantage of getting revenue automation right once you have it in place. With those systems in place, you're able to capture and unlock rich new data. A CFO can assess the overall health and quality of a company's revenue and quickly pinpoint areas that need action or improvement. And if they do it correctly, it can provide some significant benefits. It can drive business outcomes. Revenue insights can identify necessary actions, increase the quality of revenue, and determine the shape of the company. If certain activity is going on in a certain region based on the way products are being delivered because of supply chain issues, revenue recognition can actually help detect that because you're not getting the customer acceptances, you're not getting the customer deliveries that you need to properly recognize revenue, and the company can make some quick shifts to make sure that they're still going to meet their financial targets. Unlocking opportunities. So being able to uncover new opportunities such as different cost structures for new products or highly profitable geographic markets are something that revenue automation can also expose. Reducing risk, increasing the quality of that data, providing accurate reporting timely and with full transparency to the regulators, your auditors, and to the market are going to increase investor confidence in your organization. Increasing market capitalization. So with that investor confidence, increasing valuation and credit ratings, delivering accurate statements and forecasts to the market, realizing operational efficiencies, accelerating your speed of close. A lot of our clients are able to achieve daily closes or perform soft closes to see how the company is performing leading up to period end to make sure they need to make whatever changes they need to do in their operations to be able to meet their targets. So increasing the automation of close, reducing the risk of error, redeploying staff where needed to higher value-added tasks will give a lot of great benefits from revenue automation. And then finally, strategic foresight. By having all that data and having it available before it hits the general ledger really transforms the finance function, provides real-time insights back to the organization and to deliver strategic guidance to the enterprise rather than just the traditional accounting governance. And finance departments become the trusted advisor to the CEO and the management team by providing that valuable, actionable business insight. The bottom line is taking an active approach to revenue management can help organizations surpass competitors and react with agility to market changes. Now, I touched on recurring revenue and subscription just a bit because that's a major shift in the marketplace and a primary driver for achieving revenue automation. But just to kind of give you some considerations right off the bat if you're looking to make that change. And I really categorize these into 4 areas, and this will overlap just a little bit with some of the stuff that David is going to talk about just in a bit. But the first thing is we always focus on what are your contracts and obligations? From traditional models to what the subscription model is. So does a subscription, when you sell it to your customer, does it contain all your obligations? And how are you going to measure the fulfillment of those obligations? How are you going to price, discount, bundle, and sell via different channels? And understanding what are those impacts? How are you going to do upgrades, downgrades, renewal terms? Are those going to be agreed upon upfront in the contract, or those separate renewal process must happen later, which it's not guaranteed revenue anymore? And then on your revenue accounting policy, make sure you review with your advisors and update your accounting policy as applicable and put the process in place to adopt that as live transactions start happening within your organizations. You need to align it to your standard offerings as well as your advanced offerings and promotions and the contract changes that might go with it. And make sure you implement governance and control frameworks around it to include SOX, vendor SOC reporting, as well as solution upgrades that are part of your architecture to support revenue automation. Reporting and KPIs, align on those key KPIs for your organization, enable your systems to track those KPIs. You want to make sure those are front and center on any kind of financial transformation to make sure you're going to fulfill those when you're ready to go live. and also confirm your regulatory, statutory, operational, and management reporting requirements and solution those and keep those front of mind. And finally, in the business operations, this is where the real value of revenue automation can really come in. Plan out your business as usual activity across sales and finance teams. Look for cross-functional efficiencies. Make sure finance is aligned with sales, sales is aligned with finance, and look for automation opportunities within that. Some examples of processes that can greatly be automated and become more efficient is that whole new product offering and introduction process. As you're trying to roll a new recurring revenue business or subscription or offering to the market, the quicker you can streamline the financial analysis of that, how it's going to price, is going to give you a big leap in front of your competitors in that space. And look at things, traditional accounting things like the period end process. There's some new dynamic advanced ways to conduct a period end with the real-time capabilities that are available in the solutions today. With that, I'd like to hand it over to David to talk about revenue automation best practices.
Thanks, Mark. So over the next couple of slides, I'll be going over critical areas to address, as well as technology considerations. And first and foremost, often the most significant area to address is developing an understanding of your revenue contracts and their associated performance obligations. This will be key to fully understanding your requirements for any revenue automation solution. The more complex your contracts are, the more likely it is that you'll need a specialized revenue management solution to account for those arrangements. Standard contracts and complex contracts will both include product description, service description, quantity, warranties or guarantees offered by either party, conditions for returns and refunds, payment details, delivery dates, etc. Where it starts to get into more complex realm is when you include acceptance clauses, term for convenience clauses, and also in the shift to a subscription model, you'll see complex pricing models, tier pricing, bundle pricing, volume-based pricing. For businesses with those complex pricing models, having a standardized contracting process that outlines all of the terms, conditions, and pricing is essential for accurate revenue recognition. So now that you've had an understanding of your contracts, you'll need a system, set up a system to track all your customer contracts and any changes in those contract terms. Right? Businesses will need a system that'll capture all the necessary customer data and usage information. This includes contract terms, product information, discounts offered, payment methods, billing terms, and it's last on this list, but I think it's often the most important, contract modifications. Being able to track changes in the contract, especially in a subscription model economy, you'll see customers constantly changing terms of the contract, in some cases month over month, via upgrades, pricing changes, product swaps, add-ons, etc. And in most cases, contract management software tools that exist out there today can automate many of these activities. Next critical area to address, and I think Mark had touched on this earlier, one of the biggest challenges for revenue operations is forecasting. It's also one of the most important. Businesses need to have visibility into future customer payments and recurring revenue so that they can accurately recognize revenue, invoice accordingly, and better predict cash flows. The better you're able to predict cash flows, the better you are to be able to make strategic business decisions on how to structure your contracts with your customers. To make this easier, businesses should also do one or more of the following. Create an automated billing system that creates and sends invoices based on customer contract terms, right? If you're coming up for renewal, sending in an invoice in advance before the payment is due, customers are more likely to make payments on time. Offer multiple payment methods, providing more options to the customer, keep that customer retention. Through all this, essentially what the goal is to switch to a more predictable revenue model, which eliminates the need for manual invoicing and billing and prioritizes recurring revenue. Next critical area to address is tracking your fulfillment and usage. Businesses have to keep track of its fulfillment, whether it's a product delivery or shipment, license activations, services performed, usage. Keeping track of all of that will impact your revenue recognition timing and when to start recognizing revenue, and will obviously impact your deferred revenue and balance sheet as well. Goes without saying, but regularly reviewing processes and procedures to ensure that they comply with the latest accounting standards. The accounting standards governing revenue recognition are constantly changing, and businesses must ensure that they follow the latest regulations. As such, companies should regularly review their processes and procedures to ensure that they comply with the newest standards. Even if an organization has its own accounting department, having a third-party professional review its practices can help avoid potential compliance issues. Before moving on to the next slide, I want to go over a story with a recent client of mine where they were in the middle of a revenue management software project. They had been experiencing delays and had brought us on to essentially come in and help mitigate the issue. One of the significant drivers for the delay was a specific customization that was requested by the company to account for their contract arrangements, same as they were in a manual Excel spreadsheet. Turns out, after we got it and assessed and bumped it up against the guidance, turns out that process that they were following was not in compliance with the guidance, and ultimately the customization work that was requested and the vendor had spent time and effort for that customization, it was all wasted just because it was not in compliance with guidance. So before getting into revenue automation and initiating this process, understanding the processes and procedures and making sure that they're in compliance with GAAP or IFRS is critical. Next is the automation of data entry and accuracy of information. Data entry or any manual process is often the most error-prone element of the entire revenue recognition process. Automating the flow of information from one system to another, not just running a report from one system, manually entering into another system, is prone to error, right? Having that information flow automatically between systems is key to help ensure accuracy, compliance, and mitigate risk of failure, and also helps streamline the entire process. Software that is compatible with existing ERP, CRM systems is especially helpful, as it helps and allows businesses to easily sync customer data and contract information across multiple business systems. So one of the common pitfalls we've seen in our in past implementations and projects is thinking current ERP systems are enough to handle your revenue contract arrangements. Don't get me wrong, ERP systems are excellent for managing financial processes, including revenue recognition, but companies should not assume that ERP systems are enough to ensure accurate revenue recognition and compliance with accounting standards. One of the main limitations with ERP systems is that they don't provide detailed customer data and usage information needed for accurate revenue recognition without some sort of customization. Furthermore, specific to contract modifications, ERP systems may not be able to track those changes and deal with them in compliance with guidance. So ultimately, to ensure accuracy, businesses need software specifically designed for revenue recognition. Here, I'll go over some key technology considerations when thinking about revenue automation. So when a business decides to invest in a revenue management solution, it is important to set up the right processes and procedures to ensure successful implementation. Key considerations include revenue recognition software, right? The right revenue recognition software for a business will help it remain compliant, protect it from risks, streamline its internal processes, and scale. In addition to compliance, adding an automated tool to a company's tech stack will drive operation efficiencies and reduce manual labor. Next, making the case for a revenue automation initiative. Key differences between revenue automation and other automation initiatives is how encompassing it is to the overall business. Stakeholders far extend beyond the revenue department and even finance as a whole. It involves revenue team, procurement, sales operations, supply chain, IT. It's wide-ranging impact to the company. It also impacts end users of the information, critical contractual revenue information that's for both internal and external reporting. As mentioned a couple of slides back, for internal, you'll have your forecasting. Being able to predict cash flows to inform strategic business decisions is critical in today's world. Also, for external reporting needs, having a revenue automation solution makes a lot of those financial disclosures that are required in financial statements, a lot of those are readily available using a revenue automation tool. There's no longer the need to manually put that together, and it's all readily available within the system or tool. And with that, Megan, I'll hand it back off to you.
Fantastic. Mark and David, thank you for this informative session. To our viewers, we thank you for attending the CFO Dive webinar as well. And please feel free to reach out to our presenters at the emails provided with any questions. Have a wonderful rest of your day.